Alrighty, so let's take a look at some medium probability setup. So starting on the higher time frame, in this case, we're going to keep it simple and just start at the 4-hour chart. And we can see since we had that last 4-hour bullish boss here, we had a massive swing range. We formed clear bearish internal structure until eventually we took out that swing low to switch bearish. We then had another pullback and another swing break of the low. So we now have a clear 4-hour bearish swing range that we are working within. So if I zoom in a little bit, kind of looking at the more recent and relevant price action, especially if we're trading on the lower time frames intraday, we can see that we've had that 4-hour boss here. After a 4-hour break of structure, what do we expect? We expect a 4-hour swing pullback. Obviously, it doesn't always happen straight away. We had a bit of a pullback here, but relative to the recent price action, it's not enough to call that a swing structure, right? So we can just view that as a 4-hour internal pullback. We have had a break and closure below the low, so we've had that 4-hour bearish IBOS. So now the question becomes is, are we going to get another continuation of that 4-hour internal structure before we see that deeper swing pullback? Or is that, the pullback already? We've kind of made these relatively equal lows. This could be the liquidation to then start that movement, right, where we get the bullish IBOS and then have that deeper pullback. Of course, if we were to look left, on the higher time frames, we could use the daily to assist us with that. But we're just going to keep it simple, like I said for now, and just think about 3 time frames. So in this sort of scenario, I am willing, to look for potential shorts from this 4-hour supply that caused the previous IBOS to see if we can look for some quick shorts whilst accepting the fact, right, that could be the liquidation to then start that deeper pullback, right? So already, hopefully you can see as to why this is kind of more of a medium probability trade, because even though, if we're looking for shorts within this 4-hour supply, we have the higher time frame on our side. We can't say that it's like high probability, right? Because we know that the internal structure could be about to switch bullish. High probability is going to be more like if we came into the 4-hour extreme supply, right? We had 4-hour bullish internal structure. We mitigated that level. Then we switched bearish in the internal structure. And then we were coming into this strong 4-hour internal high where we have alignment with both the swing and internal bearish, right? That's going to be a lot higher probability, right? So hopefully that's kind of clear. So looking for quick shorts from this 4-hour supply zone. Let's see if the M15 is backing that up. So we can see nice clear M15 bearish swing structure where we had the break of that low, and then we started to form this bullish internal structure to facilitate that swing pullback. So if the M15 strong swing high is going to hold so that the M15 swing structure can remain bearish, right? So we can see the continuation of that 4-hour leg, then this is the high, that needs to hold. We have extreme supply up here, nested within that 4-hour supply, and we have some nice lid there too. So it's looking like a pretty decent level to potentially look for shorts. But what we have to be aware of, again, remember the 4-hour can start that swing pullback phase at any moment. If that's the case, then the M15 will switch bullish. Then from an M15 internal structure perspective, you can see we're starting to form quite decent momentum, bullish M15 internal structure. Okay, so we have to bear that in mind. So let's play this forward a little bit towards Frankfurt Open. So 7 a.m. Frankfurt Open has started. I'm just going to pull this back one candle. So from an M15 perspective, you can see that bullish internal structure continuing. But what else do we have, right? The devil is always in the detail. We had a bearish M15 change of character back here, that M15 shock, which means this is an M15 strong high, right? Because it caused the break of the low. So this potentially could be our strong M15 liquidation into our extreme. So let's have a look on the M5 if we want to take shorts from this extreme M15 supply zone. So what's the first thing we need to wait for anyway? We need to wait for a POI mitigation. So ding, 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 our alert goes off. There's our POI mitigation. So if you wanted to trade this idea, we have the POI mitigation. Second question, do we have a strong liquidation? Yes, we've just seen that on the M15. It's obviously also valid and relevant on the M5. Now, in an ideal world, I kind of prefer it where it's like in the really recent price action where you get that fake break, the liquidation, and then we enter here in like the very recent price action that almost occurs, within or near the POI. But this is still, decent, right? It's still a strong liquidation that is very near our POI. So we can look to take this trade, right? We've had the liquidation here, but we can't enter on these liquidation candles because we need the POI mitigation. Now we have the POI mitigation. We can see the strong liquidation. We can see that the PBL is still active, right? The PBL has not been mitigated and done its job, right? So if price had say liquidated this level, came into the PBL and then made a higher high, and then we got the mitigation, then I would be looking for a new liquidation to form, okay? But that hasn't happened. The PBL is still active, so therefore we can take the trade. We can set our sell limit, our sell stop order below the low. Obviously use your buffers, and we'll give this a bit of a room, give about a pip or so. All right, and then we can target our fixed 3.3, obviously net of commissions around 3R. So that would be the trade setup. We either get tagged in or price pushes up higher. If it pushes up higher, we'll cancel the order. Okay, we're tagged into the position, so now we do nothing. We either take a loss or we take a winner. Now, before I play this out, I do want to talk about, the M15. What are the phases here? The phases is that we are shorting pro swing, but we are against the internal trend. So what does that bring us on our phase chart? It brings us on phase B. And this is what we're saying in the theory lesson for medium probability, that for phase B, generally it's always medium probability because we are trading against the internal structure. We don't have it on our side. So when is the time we want to do it? I've actually got the bearish example here. We want to be doing it at the top of the range, right? It's best used when the medium time frame swing pullback is likely going to finish, when we pull back past the EQ, right, when we're in the premium, and ideally it's when we're mitigating the extreme POI, right? This is kind of the last level that has to hold if we're going to continue down. So ideally we want to do phase B here rather than like here or even here. Okay. And that's where we are today, which is why I think it's, a trade worth taking, even though we are running the risk that this bullish internal structure can hold. There's a lot of strong momentum. We could easily come into this strong internal low, mitigate that demand and shoot up. Especially as remember the 4-hour chart, we are expecting that 4-hour swing pullback to potentially kick in. So this is why for me, this trade would never hit that full high probability category, but because of the area of value, because there's an M15 strong liquidation, right? Not just an M5. We've got lid to the left. We've got 4-hour supply, the 4-hour internal swing are bearish, right? There's all those things and potentially there's enough risk reward here for you. So they're just factors you're going to have to make into your decision making, right? We want to stick as much confidence on our side as possible. And let's see how this trade plays out and it ends up being a winner there. Okay. So hopefully that's kind of clear as to, just a standard medium probability trade, at least with the way that I view the markets. Let's take a look at one more medium example. So in this example, we have clear bullish daily swing structure. After the daily swing boss, we are clearly in the swing pullback phase, starting to form that bearish order flow and that bearish structure. If we zoom right in, we can see right where price action is. Now we actually have, further room to the downside, further cause for lower prices where we can see that bearish order flow. Price is pulling back into this daily, very, very minor supply zone, right? Cause a break of that fractal low, and potentially there's room, to come into this pivot demand before we potentially see the continuation of that swing trend. Or of course, we're mitigating this daily range. So there's a bit of bullish pressure coming in. If we look at the 4-hour chart, pretty much the same thing. We just got a bit of a smaller swing range here for the 4-hour swing range. And we have clearly forming that 4-hour bearish internal structure where, we are looking for potentially that to continue to the downside until that internal structure shifts bullish. So we can see that clear 4-hour internal range, right? After the 4-hour IBOS, what do we expect? We expect an internal pullback. It's a bit subtle to see, but there was a bullish 4-hour change of character as that fractal high broke that low. Then this candle came back up and caused the chock in there. Okay, so now we're looking to see if we can play this 4-hour internal pullback, potentially up to this supply, and then eventually we'd then look to see if the continuation of that movement there. So pretty decent, nice momentum, 4-hour bullish change of character, looking for quick longs to see if we can get the continuation up to there. Of course, if that is backed up by our medium time frame, which in this case is the M15. So here we can see the M15 forming, bullish structure where we've got that break to the upside, and then we've had another break of the high to there. So pretty simple, nice bullish momentum, clean bullish structure coming into towards Frankfurt open for the start of our London session. We can see price coming into this extreme sell to buy demand, right? That led to the break of the high. Nice corrective pullback in. Very typically, we would expect then price to then get that next impulsive leg to the upside. If we look left, we're not mitigating any, super significant supply. Really, the main negative confluence factor is that we are trading against that 4 hour overall momentum, that 4 hour internal structure, that 4 hour order flow. And we have mitigated the top of that daily supply zone, right? Price doesn't have to come into our 4 hour supply to continue lower. So that is the main negative confluence. And as to why, again, this is a medium probable idea, because it's still significant confluence against the idea. But I don't view it as a low probability trade because of how strong the M15 is in this instance, right? So look for longs from the extreme demand, nice momentum, nothing nearby to the left really. So let's see what we can find as we come into the session. So obviously, with the most recent price action here in the M15, we can see we've just formed bearish order flow since New York and throughout the Asian session. So in an ideal world, we would, see price start to shift a bit more bullish with that European volume kicking in, which we now get, right? So now we've got that internal break of structure here to the upside on the M15, confirming this low wants to hold, and now we've got a clear M15 demand zone to look potentially for quick longs to see if we can get the continuation of that next bullish M15 swing leg, right, to target this M15 high. So here's our POI. You guys know the drill. We now drop down and we wait for our alerts to go off on the M15 POI. I won't do the alert sound this time. I'll save you the embarrassment of that. Okay, so now we get our POI mitigation. First tick in the box, what's the next thing we need to look for? We need to look for, has there been a strong liquidation? Now, this price action is a little bit messy, but if you actually look in, what happened is we came down, we've come up, right? We've come down, then we've come up, we've formed a bullish change of character here. So we actually had an initial M5 choke there, then we've come down, right? This same candle's come down, and then it's broken the high. Okay, so it's a little bit hard to see, but maybe I don't really want to drop down to a lower time frame in case it resets my chart. But essentially we've come up, we've come down, and then we break this high. So it's a bit of a subtle one to see, but if you check the lower time frames, you'll see this then becomes a strong low. Okay, so now we have a strong liquidation coming into our POI. Now this will be one of those ones that if you're sitting at your desk live, it will be a lot easier to see because you'll see the way in which the candles are formed, and then you'll know that this is in fact a low that broke a high. Okay, and now we have our strong liquidation. So at this point, we've seen everything we need to see. Strong liquidation, POI mitigation. We wait for this candle to close, 9:30. So at 9:35, we can place our order, offer above the high, and then whatever stop loss you are using, and then we can target our fixed 3R, okay? And that's that. So either we get tagged in, or if the low of the candle breaks, we'll cancel our order. Low of the candle breaks, so the very minute the low of that breaks, we'll cancel our order, wait for the next candle to close. Is it still within the POI? Yes, the POI is still being respected. Therefore, we'll wait for this candle to close. We'll reset our order based on the new candle size, okay? And repeat the same process until we get tagged in. Now we get tagged in, so now we do nothing, set and forget management, and there is your quick and simple trade, okay? So again, what is that? That is pro M15 swing, pro M15 internal, so it's a phase A trade, okay? So if we look here, medium probability, phase A. Why is it medium rather than high? Because we've got everything in line. Well, we would counter the 4 hour. Although technically, if we look at the 4 hour chart, we are pro 4 hour swing because this is our swing. You know, how relevant is that to our M5 quick in and out trade? Not so much, right? I'm weighing a lot more importance on more of the recent and immediate price action. You know, that's clearly bearish. We're just playing the internal pullback. You know, we're trading kind of against that because we would expect the next higher probable leg to be to the downside, and we're trading against that daily supply mitigation. So it's not to say that I wouldn't take this trade. That's, of course I am, but it's just why it's not as high probable as it could be. But it's a good area to do it, right? We've still got nice risk to reward to target the high, in and out, there's your trade, decent medium probability trade. So let's take a look at what at least I deem to be, you know, those real high probability trades in the next lesson.